FA1 Part C. Recording and Accounting for Credit Transactions. Chapter 16. Control Accounts. The topics that this presentation will cover are 1. Internal check. 2. Control accounts. 3. Control account reconciliations. 4. Period end routines. 1. Internal checks are focused on the maintenance of the accounting records. They are also sometimes called internal controls. They make sure that all transactions that need to be recorded and processed are authorized, included and accurately processed. The following are examples of types of internal checks. A trial balance is a type of internal check, because if the trial balance doesn't balance, then an error or errors have been made. Bank reconciliation is a check on the accuracy of the cash book. Control account reconciliations are a type of internal check. When performing a control account reconciliation, the balance of the sales or purchases control account should equal the total of the sales or purchases ledger balance. If they are not the same, then you need to reconcile the differences. The segregation of duties, for example, the person preparing the check is not the person signing it. Authorization is a type of internal check. All transactions need to be authorized or approved by an appropriate responsible person. These authorizations need to have limits, and these limits need to be specified. 2. A control account is an account in the general ledger, which keeps a record of the total value of a number of similar, but individual items. They are mainly used for receivable and payables, but they can also be used for goods, wages, and salaries. The day books and the cash book are totaled, and the appropriate totals are posted to the control accounts. These totals should agree with the totals of the individual balances in sales or purchases accounts. Stop the lecture. Answer question on page 311 of your interactive text study guide. For examples of typical entries in the control accounts, see page 312 of your interactive text study guide. Stop the lecture. Answer the question on page 313 of your interactive text study guide. The reasons for having control account are as follows. They are used to check the accuracy of entries made in the personal accounts. You are able to compare the balances of receivables or payables control account with the total of the individual balances of the receivables or payables ledger. They should equal. If they do not, then an error or errors have been made. They can assist in the location of errors. When comparing the balances of the individual accounts and the control account regularly, it is easier to find errors quicker than if there was no control account. The control accounts act as an internal check where there is a separation of bookkeeping duties. The person entering transactions into the control account will act as a check for the different person entering transactions into the receivables and payables accounts. The control accounts make it quicker and simpler to extract balances when producing a trial balance or a statement of financial position. One control account balance can be extracted more quickly and simply than extracting many individual balances in the receivable and payables ledger. 3. If the balance of the control account does not equal the sum of the individual receivables or payables balances, it could be because an incorrect amount was posted, because of a miscast of the totals. There may be a transposition error, for example, entering 450 instead of 540. An entry may be missed, the transaction entered in the control account, but not the memorandum account, or vice versa. The sum of the balances that were extracted were either incorrectly extracted or miscasted. Stop the lecture. Answer the questions on page 315 and 316 of your interactive text study guide. 4. At the end of an accounting period, an accountant will perform certain regular period-end routines, in order to prepare for putting together, or drafting, the financial statements of the business. These period-ending routines are different from business to business, but a number of core activities will be common to most businesses. They are balancing ledger accounts, bank reconciliations, Control account reconciliations. Preparing sales tax, VAT, returns. Extracting a trial balance from balanced ledger accounts. In a small business there may be only 1 or 2 people dealing with all the accounting entries, but in a large business there are a greater number of transactions, and larger sums of money, so there will need to be separation of duties for security purposes as well as to meet the demands of the workload. In a typical accounts department there will be a receivable ledger controller, a credit controller, who is responsible for collecting money that is owed. A receivable ledger controller and a credit controller may be the same person. A payable ledger controller, an assistant accountant, or similar, whose job it is to oversee the general ledger. A payroll controller, if the business has a large payroll. An accountant, who oversee all functions and prepares the accounts. The petty cash will probably be controlled by the payable ledger controller, or the assistant accountant, but any payments that need to be made, need to be authorized by the accountant. The payable ledger controller will prepare a check for payment after the following have been checked. That there is a purchase order for the goods. That the correct goods were received. That the goods received were received in good condition. And that the invoice is correct. This is the end of Chapter 16. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part C, Chapter 16. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. What is a control account? Question 2. What does the balance on the payables control account represent? Question 3. A dishonored check is a credit entry in the receivables control account. True or false? Question 4. How might a credit balance arise in the receivables control account? Question 5. Why might the balance on the receivables control account not agree with the total of the customer's balances? Question 6. When may a control account act as an internal check? After doing the quick quiz, do the online questions for Part C, Chapter 16. Do the questions, until you achieve 80%. Replay the lecture as needed.